If they revalue gold at 15,000, they're going to create 3.9 trillion out of thin air, which they will use to get rid of the current year's deficit, and they will be able to pay down some of the maturing debt, which matures in the next 12 months. I suggested that the correct number would be $15,000 an ounce of gold. I think there's two big questions which I literally got several thousand comments on this. One of the questions, which goes back to the first thing you said, was gold gets revalued. What will happen to the price of silver? And I hadn't thought that was going to be a question, but my answer is if gold is revalued, silver is going to go through the roof.
The key would be, as Clive mentioned, will the U.S. actually purchase gold, make the price, the actual market price, $15,000 an ounce or whatever? If they just simply do this accounting gimmick and say, okay, we're now going to call it whatever on a balance sheet, does that make the price of gold go up or not?
Global financial experts CraigHemke and Clive Thompson discuss the recent surge in precious metals and the growing speculation surrounding a potential gold revaluation. Clive Thompson suggests gold could be revalued to $15,000, which would likely send silver prices soaring even more. Thompson says revaluing gold to $15,000 could raise $3.9 trillion, 10% of U.S. debt, without causing retail inflation. According to him, the new money would likely flow into assets like gold, stocks, and Bitcoin. 3 years ago, in May 2022, the Congressional Budget Office forecasted that by 2025, the interest cost of the national debt would rise from 8.3% of government receipts to 12.1%, a nearly 50% increase. In fact, the actual figures are turning out much worse than the CBO's forecast. In 1934, the Treasury realized a $2.8 billion profit by revaluing gold. Once again, the same financial sleight of hand is under consideration, but this time on a much grander scale. In his outlook, CraigHemke notes growing talk of gold revaluation, citing symbolic hints like a gold-themed White House post. He recalls Trump's past remarks about potentially remonetizing the U.S. balance sheet by revaluing its official gold reserves. Concurrently, Hemke compares gold revaluation to the platinum coin idea, saying it matters only if the U.S. buys at the new price. If that happened, Thompson suggests this could let the U.S. outpace China in gold reserves. According to OCC quarterly reports, the Federal Reserve System holds over $54 billion in non-compliant gold derivative contracts that would need to be unwound or properly collateralized under full Basel III implementation. From a technical perspective, Thompson and Hemke recall the brief push to audit Fort Knox, with even Elon Musk and Donald Trump raising doubts about U.S. gold reserves. Thompson says even if the vaults are empty, revaluing gold and buying at the new price could rebuild reserves. Before we dive into Clive Thompson and CraigHemke's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think the talk this week has been all about the possibility of a revaluation of gold. And I did a video about this a day or two ago. I suggested that the correct number would be $15,000 an ounce of gold. I think there's two big questions which I literally got several thousand comments on this. One of the questions, which goes back to the first thing you said, was if gold gets revalued, what will happen to the price of silver? And I hadn't thought that was going to be a question, but my answer is if gold is revalued, silver is going to go through the roof. It's going to go up a lot. And the second question, I suppose it was really one question. When is it going to happen? Well, I've got my crystal ball here, which I occasionally look into to tell me the future, but unfortunately it's not giving me the precise answer on that. But what I can say when it's going to happen, we will know it's going to happen when the price of gold is rising rapidly and maybe the dollar's falling a bit for no apparent reason. So I think that will be a signal that it's going to happen. We audit the gold every year. Now, I noticed his lips were moving at the time, so I'm not sure if he was telling the truth. But he's the only one who knows that it's been audited every year, as far as I can tell. But let's just imagine for a moment that those vaults are empty. Does it matter at all? They can value the cobwebs. All that matters is that they undertake the accounting transaction and stand ready to buy gold at whatever the new price will be. And of course, some people say it could be a lot higher than 15,000. I don't think it should be, but let's say they stand ready to buy the gold at 15,000. Well, then they can refill their coffers. They can refill those vaults, which might be, if some people say, empty. first of all, in 1934, when they raised the price of gold or reduced the value of the dollar, there was no impact whatsoever on prices. It didn't increase the prices. And secondly, if I take the figure of 15,000, which is the number I used in my video, that would be raising $3.9 trillion. Whilst they still keep their gold. So $3.9 trillion is only 10% of the national debt. And don't forget, every year they increase the national debt by $2 trillion anyway, and there's no impact on prices. So, or at least not on the official inflation number. Of course, there's an impact somewhere. The impact is on the price of gold, and the impact is on the price of equities and the price of rare things that people want to own, including even Bitcoin. That's where that money is being squeezed to, but there's no impact on retail prices because they're increasing the debt by $2 trillion a year. So if they revalue gold at 15,000, they're going to create 3.9 trillion out of thin air, which they will use to get rid of the current year's deficit, and they will be able to pay down some of the maturing debt, which matures in the next 12 months. But I don't see any reason at all why that changes the price of pizzas or eggs or anything else.
Yeah, I think Clive's spot on. There's also this discussion that they'd revalue it ahead of, the strategic Bitcoin reserve or whatever that has been bandied about, that's the funding method for coming up with a zero-sum accounting gimmick to raise the cash to fund a sovereign wealth fund or a Bitcoin reserve act. The key would be, as Clive mentioned, will the U.S. actually purchase gold, make the price, the actual market price, $15,000 an ounce or whatever. If they just simply do this accounting gimmick and say, okay, we're now going to call it whatever on a balance sheet, does that make the price of gold go up or not? That's hard to say. There's these, the big idea a couple years ago was to construct the platinum coin. Do you remember?
Exactly. Yeah. There's another variation on that, isn't it?
Right, it is. That's exactly right. And we're gonna create this coin. They're gonna sell it to the Fed. The Fed's gonna buy it for $1 trillion. And it's like, well, does that make if it's 1 ounce platinum coin was special? Does that make platinum worth $1 trillion an ounce? No. So it was just kind of a trick. And so unless the U.S. or someone starts paying and buying gold, say we are a buyer at $15,000 or $20,000 an ounce or whatever, then I don't know. You can't say for certain what the impact on the the market price, what someone's willing to sell you an ounce of gold for would be. I would suspect this, since it's a recognition of gold, that it would be a bullish factor. But how, it's impossible to say, because again, none of us have lived through this before. We don't have a precedent. We can't look back and say, well, when they did this 5 years ago, here's what happened. But again, the signs, all these different signals, signposts along the way are there. It's just a matter of whether they're all going to connect or not in the months to come.
I think it'd be a brilliant idea for the USA to stand as buyer of gold at this $15,000 or whatever level they decide. But they stand there and buy from all comers. And of course, they're going to get a lot of gold in the door. Now, that's a great thing because they're building up their gold reserves far faster than any other country in this brotherhood. But they're annoying the Chinese who are trying to build up their gold reserves and have been every month after month, buying it at whatever the price is and not really caring what the price is. So suddenly, if the Chinese want to keep buying gold, they're going to have to pay twice a lot more because if the Fed is, or not the Fed, if the Treasury is standing there with a floor at, let's say, 15,000, nobody's going to sell any gold anywhere on the planet, even to the Chinese, for less than that, because they can get 15,000 out of the United States. So that would really piss off the enemies of the United States. You'd get their vaults full of gold and prepare them for what comes, which is obviously down the line at some point going to have to be a sound money policy. And what are you going to back the currency with? Is it going to be gold or what?
Elijah, even today, as we record this on the 22nd, maybe about an hour ago, the official White House Twitter account put out an image of the White House painted in gold and all these gold coins falling in front of it and covering the ground like snow. I'm like, what is this about? Yeah, I mean, it's right there on X. Anybody can see it. And you think back to the language Trump has used. the golden dome that he wants to build, his missile defense, and the golden passport that people can pay $5 million, to buy citizenship, and we're going to drill, baby, drill for liquid gold. He comes down the golden staircase. I mean, he's got gold all over the Oval Office. You think back to February when he was standing there with Secretary of Treasury Besson, and he said, and Besson actually said, we're going to try to remonetize the balance sheet. I mean, a lot of people went, well, the only assets you have on the asset side, of any substance is the gold that you carry at $42. And yeah, you got all this talk about gold-backed treasuries and whether that might come next year. So I don't know. Maybe none of this, this is all just dots on a screen that we can't connect. But we might look back a year from now.
Market expert CraigHemke notes that freezing Russia's reserves and removing it from SWIFT prompted the BRICS to seek alternatives, fearing a similar action. He notes that this move has weakened global trust in the dollar as supply continues to rise. CliveThompson adds that U.S. allies fear becoming enemies overnight amid Trump's trade accusations. This uncertainty is prompting nations to reduce reliance on the U.S. dollar. BRICS nations have been particularly aggressive in building gold reserves, with unofficial estimates suggesting that China alone may hold as much as 35,000 tons of gold within state-controlled banks, far exceeding their officially reported 2,292 tons. Similarly, Russia's true holdings are estimated to be closer to 12,000 tons, rather than their officially reported 2,330 tons. Based on current trends, Hemke says the Fed may face significant changes if Trump replaces Powell with a candidate who favors a weak dollar and low rates. He sees signs, such as gold talk and Fed shifts, indicating significant changes by next summer. Moving forward, CraigHemke says gold and silver remain in the early stages of their bull run, with limited mainstream demand. He notes small asset allocation and jokes that price spikes bring old holders out to sell, but real momentum will start once that supply is gone. Let's get back to the interview.
That wheel took a big spin forward a little over 3.5 years ago, when at the start of the Ukraine war, the U.S. decided to seize Russians' foreign-held currency reserves and kick them out of the SWIFT international payment system. And I think a lot of countries within that BRICS coalition, whatever you want to call it, looked around and said, well, geez, listen, look what happens to you if you get sideways with the U.S. They'll just cut you off at the knees. And we may get along with the U.S. just fine, but our interests don't align 100%. How long before do we get sideways with them and they do it to us? And so that kind of spun the wheel even faster, moving towards some type of alternate system. The Chinese have been working on this. The Russians have been working on this. And it's not, again, to me, it's not just a binary choice where it's one versus the other. It's competition for the dollar system. It's competition that draws demand away from the dollar at a time of increasing supply. And that just means you're lessening the value of the dollar that much faster. It's a natural evolution, really, of this monetary system, and it certainly seems like it's eventual.
Your comment, Craig, about countries being friends with America and then wondering what happens if we do something which we're suddenly not so friends. Well, we see that happening already. America is not the countries themselves, it's America themselves. And Donald Trump has been saying, your country has been cheating us by selling us your goods too cheaply. And suddenly, one day you're friends with America, next day you're the enemy. So I think that's making people a lot more worried about holding all their assets, all the reserves in U.S. dollars.
Yeah, no, I hear you, Clive. And I was thinking as Elijah was bringing the question up, there's kind of a dichotomy there too, if I'm reading it right, in that, Trump has said, hey, if you're going to play ball with the BRICS, we're going to slap a tariff on you for that too, right? But at the same time, a lot of this discussion this week has been about a fundamental change in the way the Federal Reserve does business. In the mold of this America First construct of, they pay all of this interest, $500 million a day, I understand, in interest on excess reserves, a lot of that going to foreign banks. They got foreign banks that access to the discount window. They've got foreign currency swap lines with all these other different central banks that don't necessarily, you could say in the bigger picture serve America's interest, but it kind of draws the focus of America's central bank away from just focusing on America, and so I think this is kind of the broader picture stuff that I wonder if we're going to see all these changes coming over the next 12 months, these structural changes as to how the Fed operates. And then what does that mean for the dollar's place in the world and everything else? If anything, I know they're warning us that this is coming because Powell's not sticking around. He's not getting nominated for a third term, obviously. So either they come up with a reason to fire him, for cause, which is what all this, Eccles building $2.5 billion renovations about, trying to find up a reason to fire him for cause, or that he's going to be out. And when he's out, Trump's going to put in someone that's, really weak dollar, very soft, low interest rate person. And the dominoes are going to fall from there, whether they're going to restructure the Fed. They're warning you all this is coming, just like all this gold references. And it just makes you wonder how things are going to look by next summer. And if you think gold is expensive at 3,400, you're going to really think it's expensive by next summer, I suppose.
I mean, one of the questions I got is, what does America want? Does it want a strong dollar or does it want a weak dollar? And we're hearing both messages coming from different directions, and it's hard to make sense of it.
We've hardly seen any action yet come into the precious metals. You see these charts that I see them on Twitter all the time of the I guess to call it the value, the market cap of the GLD. And people try to say, hey, see, that's a sign, it's getting crazy. Well, the reason that the market cap is twice what's ever going to be, it has been in the past, is because the price of gold has gone up. The actual tonnage held in the inventory of the ETF is still about 20%. Its highs back in August of 2020. So it's not like we're seeing some big, mad, crazy rush of, every Uber driver, and shoe shine boy buying the precious metals yet. Rick Rule has always talked about, back in the heady days of the late 70s, maybe we were as high as 10% global asset allocation to gold and silver and the mining shares. Well, we're still maybe 1%, maybe 2%. And there's so many dollars in the world. Heck, one stock alone, NVIDIA, is worth, $4 trillion in market cap? So you peel off just a couple basis points of the NVIDIA market cap, and move it into the precious metals. There's just not that many investment opportunities where that cash can go. So in terms of the metals being expensive or the mining shares being expensive, if all this plays out the way we kind of expect it to, it's early in the game.
The best thing which could happen I talk about the silver now. The best thing which could happen for the silver price is it goes up and down, up and down, up and down in such a way that we don't notice that it's heading higher. Because every time there's a spike in the silver price, and when I say a spike, like what it did this week, the grannies come out of the woodwork. What am I talking about? Grannies? The grannies with their silver candlesticks, or people who happen to have some silver coins, they've had it for 10 years and they think, now it's up. It's higher than it was yesterday. I'll take my price. And I know that has always been the case, but I had a perfect illustration of that last week. I happened to go to my favorite silver dealer, and I haven't been there since February because he's had nothing. He'd been out of stock. And suddenly I get this message saying, I've got some stuff in. And I said, okay, I'll come along and have a look. And I have never seen so much stuff. He literally, one of the things he got in was one of these, what they call it, a monster box of maple leaves. I didn't buy that one because it was kind of out of reach of the sort of cash I was carrying on me on that day. But I did buy some nice collections of coins. These are Australian Year of the Ox, and a bunch of Australian tigers and kookaburras. They're silver. These are all silver coins. That's a kookaburra. They have a new design every year. And I got this one. That's a 10-ounce coin. This one's a kilo coin. It's the Year of the Rabbit, 2023. They have a new coin, new zodiac animal every year, and they have it in all the sizes. So they had a lot of stock, and I could take my pick, and I bought more than I normally would, but that's because he had a large choice. But the reason he had a large choice was the spike in the price. People had come in and said, I'll have that, thank you very much. But of course, when this dies down, that guy who sold on that spike, he won't sell twice, he's already sold it.
The mounting U.S. debt and persistent deficit spending have raised serious questions about long-term dollar stability. At the moment, silver prices are hovering at $40, their highest in 14 years. But the reality is that compared to gold, silver prices have barely moved yet. The gold-to-silver ratio currently sits at 85, well above its long-term average. 2 months ago, it was above 100. UBS analysis suggests a fair value range of $7,500 to $8,500 based on monetary expansion since 2000, with a projected timeline of 2026 and 2027 for reaching these levels. This timeline aligns with the expected full implementation of Basel III standards globally. Could a gold revaluation restore trust in the U.S. financial system or accelerate global de-dollarization? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.